Hello and welcome to this short tutorial on the Debits and Credits Trainer. It's an Android app that you can buy in the Google Play Store. So if you have it already downloaded, you can go over here and just click on the Debits and Credits Trainer and it's going to launch. When the Debits and Credits Trainer first comes up, we'll be on the very first tab, which is the transaction log. The purpose of the Debits and Credits Trainer is to help people learn how to record transactions, whether they know the debits and credits or whether they know simply the increases or decreases. It allows you to enter it, and then it will create a journal entry, create the income statement, statement of retained earnings, and balance sheet. And so it helps you learn the impact of these things. So the way to start to use this app, you just come up here and you click on Add Transaction. When you add transaction, two different accounts will appear and you enter the information for increases and decreases or debits and credits. You can also add additional accounts for the same transaction. So once you click on Add Transaction, this is what appears. This is transaction 1. It's currently in balance because the debits equal the credits. It's green, which indicates it's also in balance. And so let's assume we receive $100 because we borrowed it. We're going to borrow $100 and we'll use that to start running our business. So let's do that transaction. The way you do that is you first come here and you click on this button, which has a drop-down menu, which allows you to choose the accounts affected. In this case, it's pretty straightforward because we said that we're going to receive some cash because we borrowed. But you can scroll through here and choose whichever account's being affected. So we're going to choose cash, and then we'll decide whether we have more or less cash and how much more or less. Okay, in this case we're going to say that we have more cash. Let's say it's $100 more. So I'm going to show you how you can choose this button, which shows increases, decreases, as well as debits and credits, and you can use either one to record your transaction. So I just barely chose the increase button, and as you can see, these other options come up. I'm going to say we have more cash, so I'm going to indicate increase. As soon as I choose that, then it will go back and allow me to choose the amount. So here I can now put in the amount, and when you put your cursor in here, your finger in there, you can actually type in using a keypad that appears, or you can just type in using the numbers on your phone. So here, as you can see, when I got in here, I was able to type in the 100 for $100 more cash. I'll now go to the next account. As you can see right now, since I've only put in half of the entry, showing that our cash assets went up, and I haven't indicated where we got that cash, we're currently out of balance because, you'll learn later, debits do not equal credits. So I'm going to need to go to the next account by choosing Next here, and that'll bring up the next account, which will help us balance things out. So by choosing Next here, the next account comes up. So the original one is up a little bit higher now. Now we're moving down. Now we'll have to say how we got this cash. And what we're going to do is we're going to choose this drop down and say that we borrowed the money. In this case, by clicking on this, we'll bring up Notes Payable, and we'll click this one right here. So as you can see, it's Notes Payable. We do have more notes payable. We owe more money, so I'll leave the increase there. It's already fine, although we could have changed it. I'll put in $100 as well to get this to balance out. So as you can see, by my putting in $100, it's now turned green, and we're currently in balance because our debits equal our credits. Because our entry is complete and our debits do equal our credits, we can click on Done to show the full transaction. So this is the full transaction. What we'll do now is go over and look at the transaction details, which is more the format that you would normally expect for an accounting journal entry. So I'll click on this tab, Transaction Details, to bring up the next screen. So as you can see, this is what you normally expect just from here over. I've put the pluses or minuses over here on the side so you can see whether cash is going up or down, notes payable going up or down. And this is the total, so you can see that total debits equal total credits. Now moving back to the transaction log, so I pressed here, You can see if you wanted to add more accounts to this one transaction, you'd hit this green bar on the left-hand side. Now if you want to add a whole new transaction, you'd click Add Transaction. And if you want to remove all of these transactions, you hit Remove All. If you want to just remove one, you just hold your finger on it and it allows you to delete that one account as part of the transaction. So rather than take your time to go and record a few more transactions so you can see what happens, I'm just going to go ahead and record them, and then I'll show you the impact on the income statement, statement of retained earnings, and balance sheet. So what I've done next is I added a couple more transactions. In this transaction I got more inventory and I paid for it using cash, and then I took $5 of inventory and sold it for $70, and I'll show you that here in just a second. So you can see here I made a sale on account, so I received I have a customer who owes me $70. My sales revenue increased by $70, and I had to record an increase in my expense of cost of goods sold and a decrease of my inventory for $5. Okay, so those are the total of the 3 transactions. Now we'll go and look at the transaction details by clicking on this right here. Okay, so click on transaction details, and there you see transaction 1, 2, 3, they all balance. And now we'll go and see the impact of this transaction on the income statement, statement of retained earnings, and the balance sheet by just clicking on this tab. You can put your finger on these and drag that across. So here's the income statement. You can see the sales revenue and the cost of goods sold, resulting in a gross margin of 65. As there are no other expenses or gains or losses, you'll see that the net income in this case is also 65. Naturally, we haven't recorded the income tax expense or any of that stuff, but basically our net income increased by $65 so far. Now we'll look at what that did to the statement of retained earnings by scrolling across here and choosing the retained earnings statement. So as you can see, the statement of retained earnings is very simple. We'll always start with 0 because this is a very simple app. This is the income for the year, paid no dividends, and so at the end of the year we've retained $65 of the income we earned. Let's go on to the balance sheet. So this is just a summary balance sheet. You can see the assets at the beginning were 0, at the end it's 165, so the total change is 165. Liabilities went from 0 to 100, up 100. And this is naturally the vertical view. You can turn your cell phone sideways and this winds up formatting a little bit nicer. Let's go on to the full balance sheet. So here's the full balance sheet. This is the assets. This is the current assets. As you can tell, the total current assets are 165, which represent the cash you have left over, the receivables, and then some inventory. I'll scroll this down where you can see total assets are 165. Now we'll look at liabilities and stockholders' equity, which should also obviously add up to 165. So here's liabilities and equity. Total liabilities, $100. That's the note payable of the original borrowing. And then as you can see, we have the 65 retained earnings, and in total 100 liabilities, 65 equity. So in short, I created this for students or people who are wanting to learn their accounting a little bit better, because what it does is it enables them, if they don't know their debits and credits, they can record their journal entry simply as an increase or decrease. As long as they know the accounts being involved, the amount, and they know whether they have more or less of that particular item, they don't really need to know their debits and credits to then get the answer as to whether they are debits or credits, as you can be seen in the transaction details. So going to the transaction details, I like this format because you see the debits and credits like a normal accountant would be used to seeing, but also off on the side you can see that we've put pluses and minuses so you know whether these accounts are going up or down. So I encourage my students to use an app or something similar to this that I created in Excel to predict the impact of these journal entries on the income statement, statement of retained earnings, and balance sheet. If they can do this, they've made some significant progress in understanding the mechanics of double entry bookkeeping. I hope you find this app helpful to you, and share it with a friend. Aloha.